This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show, where we look at technical charts and try to understand what happened in the market and then plan for a better trade for the next week that's starting tomorrow, May 6th, Monday, 2024. So we'll come back here, we'll see the charts first, and here we see a weekly chart. This is clearly showing that breakouts from the cup and hands and multiple flat breakouts that's happening on both indices. Very clearly see. Another weekly view which shows that this is happening within a trend line channel. Multiple flat breakouts and all that. Here's another view on the daily which shows consolidations, consolidation, breakouts, and the same on Banknifty with a little more violence there. Looking at the weekly candlestick on the indices, left Nifty, right Banknifty. Left we can see Nifty has formed a doji. A doji which is sometimes known as gravestone doji. Gravestone doji on the top of the rally is not that great. It's bearish. That's weekly, medium term. So it shows the kind of indecisiveness at the very top. And look at Banknifty. Here we have an inverted hammer. Look at the size of that wick. Right? Big moves hitting almost 50,000 is almost hit just 2 points away from 50,000 Banknifty, and then almost all of the gains is given back. Half of the gains is given back. Right? In fact, there are huge moves, and same happened on Nifty also. It hit a new all-time high, very close to 22,800, and then gave up almost all of it. Right, it's 1.67 move up, and then a reversal. Right, and the reversal is one. Right, so Banknifty 3.6% move up on Friday. Means 3.6% move, hitting the all-time high, and then reversal. Reversals means it's 450 points reversal on Banknifty and 950 points reversal. Single day 950 points on Banknifty. So that is the kind of moves that you see here. So candlestick wise, the Nifty candlestick is definitely something that need to be worried. And it's confirmed the doji is indecisiveness. Any small body is indecisiveness, and doji is smallest body, and gravestone doji is even more bearish with the extreme pressure of the selling that is evidently bad. So you have to be cautious, and it's confirmed if the price moves below the low of the week's candle. That means it's going to be bearish, more bearish, and reversal will continue. But if it stays within the low of this week's candle, then it should be fine. Same with Banknifty also. It shows some more strength, but still it's a small body considering the wick size. Right? And both of them making the all-time highs and then doing this drama. Right? That was a kind of big volatile moves. Right? It's profit booking, and it could be some big news that came in, and all that. And also make a note that weekly also there is a double top reversal that may be confirmed if this price goes below the candle's low. Right, double top or M pattern, whatever we call. That M pattern is very much evident here on the Nifty's daily charts. So daily charts are showing that wide range bearish candle which is engulfing the previous 2 candle bodies or 3 candle bodies almost. And it's an engulfing bearish candle on the Banknifty also. The body of the previous candle is completely engulfed, so that makes it very severely bearish. Often when Friday, when we have such bearish moves, Monday it continues. We don't know whether Tuesday it continues or not. So expect some more pullback, right, before it gets into some consolidation, hopefully. So candlestick wise, it's heavily bearish fall. It's a very wide range fall. That is what matters, right? And if you look at the law, it was a truncated week, and if you look at the 4 days of trading, what exactly happened was it moved up, made all-time high, and then reversed, giving back everything in one single day, trapping all the bulls. Same Banknifty also. 2 days it moved up, 2 days it fall down. But then gave up everything back. It just kept something back in the bank. Right, that's the kind of move that happened. Bollinger Bands are showing no more expansion on the upside, and it's absolute consolidation on the Nifty on daily. And by Nifty, it continues to show that expansion. There's no contraction yet. Right? So that way, Bank Nifty could expect more up moves, and Nifty could expect mostly sideways action for the upcoming days, is what probably indicates. We'll come back to see the support and resistance levels here, but before that, we just need to wrap it up, and then what was the moves for the last weeks. So it was 1.65 and moved to all-time highs, and then a reversal, finally closing flat. A flat close of 0.24%, 53 points end to end. That after moving 1.67% up to all-time highs. Remember, it's a 35% rally so far. Price still maintaining the weekly expansion moving average high. And it was multiple cup and handle breakouts and all that for both indices. And Nifty moved 3.6% in long-term highs, and then finally closed positive, but just 1.5%. That's more than half of that gains that it made wiped out. Managed to close above the 20 expansion moving average. Remember, it is 29% rally and multiple breakouts and flat patterns. That we already seen that. On the daily time frames, it was nearly 2%, 50 points of fall from reversal from the high, and then a negative close of 0.76, 170 points down with a bearish engulfing bull trap. Let's see on the Bank Nifty, it's 1.96, similar 950 points of fall, and the 307 points down wide range bearish engulfing bull trap candle. Still, both of them maintain a close above the 20 expansion moving average on the daily. So basically, market did try to move and hit the all-time highs, and then stiff resistance came in there, forming a double top M pattern, and then finally a closing, indecisive closing of dodging on the Nifty, and most of the gains wiped out in the Bank Nifty also, which almost went violently to hit kissing distance near the 50,000. Can you believe that? So the question is, would it sustain this fall? Right? And next week, would it just consolidate after having sold off big way like that, and then would it sustain this and then consolidate, or would it try to move up, or would it not sustain and then fall down to retest the previous low? So that's the question in front of us. We'll try to find the answers from a complete study that follows in the following slides. So on the bands, we've already seen that it's a potential sideways show on Nifty in the short term, and the upside expansion of potential up moves on the Bank Nifty are pretty contradicting Bank Nifty as compared to the Nifty on the Bollinger Bands. That's a very short term, right? That's just because the fall was not that. The move was so big that the fall is not that much impacted as Nifty, right? So let's try to move on and find some answers to the support and resistance line. So the first resistance would be the 22,800 and this 22,794 thing, which is the all-time high. So that's the first resistance. Given that, that's nearly 400 points. Less than that, 350 points above, right? So that's first resistance, and after that it will be 23,000, which is the all-time highs. But the channel top may be ending at around 22,900, so that can also be a resistance after 22,800 resistance. Downside, the 20 expansion moving average at 22,427 will be the first support, and after that you have a gap and 50 expansion moving average coming close nearby 22,225. Right, so 22,200 is going to be a good support, and then if that's breached, it comes to the 22,000 big rounding number, and then further down to 21,800 and 21,769 exponential moving average, very close to that. That would mean a low very close to the previous swing lows, right? And if that happens, then it will be breach of the higher lows, and then we may have trouble for price moves below the 21,700 swing lows. As long as that is not breached, so most likely the market may may dip a little bit, find support somewhere in at these support zones, and then stops it there and then reverses back upwards with me, right? That's what we had to hope. Remember, this 5% dip happened because of very poor global global cues because of the war information that came in that caused all this, and then followed by an FPI policy of Mauritius and all that. So global cues are not that bad. We'll come to see that in the next slides. So we may expect some dip, but not as severe as what that 5% dip that happened very recent. So that's the support resistance of the Nifty. Bank Nifty, the first resistance right now it's at the first resistance would be the 49,974.50. That's all time high, and the 50,000. So that's a zone where the highest resistance is. After that, it can find resistance all the way up till 5,500, like 50. 100, 50, 200, all the way to 5500. All those rounding numbers can be resistance zones. Downside, the first support, you can see that the first support yesterday or last week candle has taken a support at the neckline of that rounding pattern. So that is 48,670. That would be the first support that could continue act as some kind of support, and that's pretty big. Then we have the 48,300, which is the 20 exponential moving average. Then we have 48,000, which is coming in confluence with the 23.6 Fibonacci retracement levels, and then 47,627 at 50 exponential moving average, and then 38.2 Fibonacci extension and 100 exponential moving average at 46,959, 47,000 would be the next support major ones. 20 exponential moving average and the 50 Fibonacci retracement levels are very close to the 46,000. So that will be the final down move. Remember, it is a trendline channel. Price had hit exactly 50,000 to top of the trendline channel and then reversed, and the bottom of that would be near the 47,000. So the max where it can dip maybe the 47,000. The worst case is what we can expect, right? That will make it at a cup and handle breakout probably. Another one, second one. We had a similar one few weeks back in the April mid, and then it did drop out to 50,000, and then we are forming another. If the price moves and retraces further towards the channel top to retest that swing lows, then we may be having another cup and handle, right? So that's how the support resistance from the bank looks like. Let's move ahead. We try to understand the momentum using the RSIs and the trend using the ADX indicator. So we have both time frames of the weekly and the daily both considered. Nifty and the Bank Nifty both indices considered. On the left side we have the weekly. Weekly you can see that it's bullish. Actually Bank Nifty was not bullish last week. So weekly the momentum was improved to become absolutely bullish. Nifty and the Bank Nifty. So medium term it's bullish. Medium term momentum has improved. So the momentum got hit on Friday's move early, where it had slipped in the sideways on Nifty and the Bank Nifty. Now the trend has also improved to cross over to bull zones on Nifty and the Bank Nifty. This indicator is showing that the Nifty and the Bank Nifty on the weekly is having bullish momentum, but it's having a falling strength. What has got hit is the short-term, momentum, short-term trend for the Nifty, which is crossed over to the BR zones and falling, right? But otherwise, medium-term trend is intact for Nifty and the Bank Nifty, right? In fact, the short term and the medium term for the Bank Nifty is bullish trend. So trend and momentum, nothing much has happened, just that the short term momentum has slipped to sideways. Medium term momentum and the trend both are intact is what we can understand clearly. So volatility, one way of studying that is Bollinger Bands, expansion, contraction. Second way of understanding the fear and greed index, India VIX, that is the second way of understanding the volatility. So that has behaved unusually during the last 2 weeks. Previous week we had a 20% nearly fall, and then we had a 40% double of that reversed. Now it's at 14.62 suddenly. Last week we had almost close to 10. So that's a kind of unusual behavior. The reasons for which we do not know, but the VIX is likely to hike, to become high closer to a major event like election outcome. That is normal. But why it dipped that 20% and then did that drop? No, that is something to do with the option carry over from one expiry to the next expiry is what it's assumed, but very unusual option behavior. And now we have a rising VIX, and then that probably indicates that more downside may come in naturally when the VIX is spiking up. But definitely there is a fear and greed in the market that's increasing. Any change in the expectation market with respect to the election outcomes could screw things up when the VIX can spike beyond to hit the 20. That's a time when you just try to come out of the market, stop trading, especially the options, and then just wait for the outcome instead of getting fried in between and trying to beat the market. So don't do that. Now the implied volatility and the realized volatility spread differences was not much in favor of the options sellers, but now it has turned slightly in favor of 31% nearby, and the option IV percentile also is 87, it's moved to the very high. So that way option sellers may gain now as compared to the previous week when it had dropped at 10, when we had 6 or 7 as the spread difference between the implied and the realized volatility, hardly any premiums. So that's the things that we can study from the volatility aspect. And the open interest, the futures open interest is showing that it's long and winding on both indices, which is people are winding the long positions, and then that may lead to more fall. Open interest for the May 8th Banknifty and May 9th Nifty. It's not monthly, it's a weekly. Sorry for that. The next weekly expiries that comes in on 8th and 9th on the indices. If you study that, the put call ratio is 0.65 and 6.4, which is bearish in nature, right? Nifty and the Banknifty both. So options II and futures II would be showing bearishness. Every resistances can be seen at 22,800 and 23,500 on the Nifty. So highest put writing is in at 22,000 and the second highest at 21,800. The highest put writing in Banknifty is at 47,000 and 49,500 is where the highest call writing is seen. Second highest put and call writing is at 48,500 and 50,000. So it's an 18 point wide weekly expiry speculation that we are seeing there on the Nifty, and a 2,500 point wide range of speculation that we are seeing in the Banknifty. The option traders have written the puts and the calls. So overall, bearishness is evident. Levels are wide. If it all the reverse continues, there is a possibility that 22,000 can be touched and 47,000 can be touched on the indices. And if it all this was just a profit booking and then a jerk, and then if market decides to move on, markets can go back to the previous all-time highs once again. And same with Banknifty also, right? So that's what it shows. But overall bearishness is evident in the option writers data also. If you study the different sectoral indices for IT, we are seeing, so overall we are seeing the major one that got hit last week was the IT sector, 2.3% down. Others are all more or less okay. In fact, metal and the auto did move up, and pharma also moved up. So it was FMCG hardly was close flattish, nothing lost. Reality lost 0.5%. So the big loser sector wise, if you see, was IT. So sell-off happened in the IT mostly. That's what you have to understand, right? And some sectors are moving up also. Overall, if you see, except the IT, things are not that bad either at the moment. It's bullish or in the sideways trying to move up. That's what we are seeing. Let's try to have a closer look at the sectoral indices. Left side corner, we are seeing the Nifty index is forming a cup and handle. So this, once this is over and once the bottoms are found, it can be a big breakout. So watch out for that. But normally is at the very bottom of the RSI 40 nearby. Trend is also bearish, and that's the sectoral trouble. but reversal from here this could be an opportunity to invest in, because the gains that may come in when this breakout happens and reversal from here occurs, that's the time when you make money. And if you look at the Nifty metal index, it had broken out and then it's at the very top. Moment is bullish, extremely bullish, and trend is also bullish, and caution has been made in because it's at the very top of the trend channel. Auto index also caution, absolute bullish trend and momentum, and price is at the very top of that trend line channel, caution but bullish. So metal bullish, auto bullish. What about Pharma had small retracement that came in, but it is basically doing nothing but consolidating itself to break out from that flank. Momentum had taken a dip, but it had taken a support at exactly RSI 60 and then bounce up. Good opportunity to get in pharma stocks. FMCG has been retracing from the top of the panel channel and then consolidating since several weeks. Opportunity to get in. Prices dipped to sideways but not the bigger zones. Consolidation sideways moves happening, and at some point in time it will find a bottom and then move up towards the channel top once again. Right time to get in. So pharma, FMCG and IT are opportunities to get in right now in SIP mode in quality stocks. Reality has been at the very top. It's still at the very top of the trend line channel. You have to be cautious. Momentum is bullish and trend is also bullish, but you have to be cautious because it's at the very top. It has run up too much. Even now a flag breakout is what is happening. So caution has to come in at the auto and the reality index and the metal index, and IT, pharma and FMCG may be opportunities for long-term investment in quality stock in the sectors, but because of the fact that they have pulled back a little bit and some of them are consolidating, others are still correcting. For example, IT, right? So that's the now moving ahead. Heavyweight stocks, if you see major heavyweight that constitute maximum to the indices, it's the HDFC Bank, which has paused the up move for some time and then going sideways. Trend also seems to be not doing that great, but Reliance has pulled back. The biggest fall on Friday happened on Reliance. It was 2% fall in Reliance, and maybe an opportunity to get in. Price is at the 60, very close to 60 RSI, and if it drops below that, we have trouble. But as long as it maintains its support zones, and flag breakout could be an opportunity for the next breakout towards the channel top. Right, opportunity to buy Reliance. ICICI Bank had given big breakouts, big volumes, heading towards the channel top once again. Extremely bullish momentum and the trend. Right. The only stock that maintains solid bullishness is ICICI Bank. Infosys has been retracing after hitting the top of the channel, and momentum had dripped into the bearish zones, and I'll be careful, but at the same time it may be an opportunity to invest as well, because these are all high quality stocks just going through some headwinds. TCS consolidating after the breakout from that flag pattern and then sideways momentum. Yeah, it is sideways, so the entire IT stock itself is sideways. Kotak Bank is breaking down from the consolidation because of some bad news from the RBI restrictions, and it was consolidating since 2021, so that's a 4-year consolidation, 3-year consolidation that is breaking down. So it could go anywhere, but yeah, so probably just ignore and try to catch a falling knife, because the price has fallen outside a long consolidation zone, and volumes are big. Trend and momentum in the medium term is all negative, and so just stay out. ITC heading towards, trying to get towards the bullishness, consolidating flag breakout possibility is an opportunity to get in. Right, so just to wrap up, HDFC Bank sideways, opportunity to get in. Reliance flat breakout, consolidating, opportunity to get in. SIP all. HDFC Bank breaking out big time bullish, and Infosys in the bear zones. TCS sideways. So we have, and ITC also sideways, and Korak Bank is breaking down the bear zone. So only ICICI Bank is holding the market in the bull zones, but we have Reliance and ITC with reasonably good bullishness emerging in them, with giving opportunity to get in. But we have troubled IT as well in index heavyweights. That's a mixed bag, right? That's a mixed bag. But thankfully, we just have the IT that has fallen down to peer zones, other than the Kodak. Look at the mid cap and the small cap indices. March had a big pullback following the policy change on SEBI guidelines and all that, but full recovery just in another 2 months, and once again it's trying to break out. Mid cap and small cap both having bullish momentum at the trend. It's a good thing that the market is moving strong across the sectors, across the caps, mid cap, small cap, large cap, all. So that's when you see a broader spectrum of the move. Having said all that, let's try to get to see how did the institutions did last week. So FIs are not sellers, strangely. Only small buying, 2,000 crores of buying has happened for a change. They had been net sellers since beginning of April, or since now, and probably this green is seen on a weekly basis, probably only 1 or 2 weeks in the entire 2 months. And the last several years, last 2 or 3 years, if you see, FIs were net sellers mostly, and all that market is holding on, relying on, is the domestic institution money that's flowing from the mutual funds. That means retail money that's flowing into the stock markets nowadays. So yes, again 4,000 crores of buying happened in the cash market last week. So net longs and derivatives also slightly more up for the institutions, as you can see here. So domestic institution was positive this week, but FI's participation is not that great. So, and it's only the DI money that's flying in, causes some concern. We are trying to see the global markets, the US markets primarily, and then commodities, gold, commodities and currencies. Commodities means in gold and the oil primarily. Look at the currencies. The dollar index has cooled off 1% drop, and it had a 5.5% up earlier. Now it's fallen to sideways and falling at 105 now. It's good for emerging market like ours. Rupee has also appreciated a little bit, but flattish, still about 83 and remains weak. But US INR also shows some red, very flattish red though. Crude oil has fallen down nearly 7%, which is great. Below the 80 once again, 77.93 from the top of the trendline channel after a up of 23% towards the top, and then give us down. That is, if that, so once the global war worries have cooled off, probably the crude oil also has cooled off 7%, which is again good for an oil imported country like ours. Gold is spiked. No, gold is also cooled down 1.5%, but not much. Still very close to the all-time highs, and the momentum is bullish and falling, but bullish. It's very close to the top. Remember, we had 25% from the swing low spike up to make the all-time high on gold. So, gold is spiking up and hitting when we have worry as to if the money may be moving to safer havens or not. That way, being a hedged instrument, when gold spikes up, we have trouble. But thankfully, last week was a small drop, but still goes in favor of the bears because of the fact that it's still very close to the all-time high. In US markets, if you see the Dow Jones, that overall is green, but not big green. You can see that we can see the oil. Yeah, so this is where oil is. It's in a 7% drop, right? Good, and it's a drop on the gold also, but but still not that far from the all-time high. Coming to the US market, the Dow Jones, Nasdaq, and the S&P 500 all had some pullbacks of 6 to 8%, and it seems like it's trying to consolidate and move up. Once again, we have a green 1% move with price climbing back to the bull zones once again on all the indices. So and the US markets are green. It's good. So overall global cues are good, and dollar dropping, crude oil dropping, US markets green. So, and even gold is also having small pullback. So that way global cues are nothing wrong in there. Let's get into a few actionables in the stocks, like it's Hindalco long call and some pharmaceutical long call. Hindalco metal sector is shining, but I have to be cautious with tight stop because it's at the very top of the trend line channel. We already seen that. It's a cup pattern breakout. That's midway, had got some hit back. So make an entry from last week's candle highs, and then you can ride that with tight stop losses. Reason is reasonable good volumes with momentum and trend bull zones. Some pharmaceuticals having a flag pattern formation. Any price move over the previous candles high can be an entry, expecting a breakout, even reasonable 2%. 1:2 risk reward. So flag pattern breakout is the reason. Momentum is bullish and taking support in RSI 60 is another reason. And trend is also not that bad. Pharma sector itself is consolidating and giving opportunity to enter in some pharmaceuticals, long Hindalco, long two stock actionables. Another actionable is the Batman strategy, completely hedged on the Nifty weekly. Basically, we are selling out of the money call and put options and taking inside hedges by buying in inside hedges, and then outside hedges also we're taking by far out gains, making completely hedged. The risk reward is reasonable, not that great as long as it come out, but this is the best that can be done on a weekly, which is completely hedged and risk free given the volatility in the market. It gives a reasonable range, similar to how the open interest levels and the support resistance levels that we had studied from the charts are matching with 22,000 and 22,850, and that's the right range that we require. Right, risk reward is not that great, probability of profit also not too great, but 70% is okay. Right, so we can increase the capital size as per your risk appetite and then capacity. Right, this is for one lot. Let's run. Right. So basically, you are selling price and then buying inside hedge, half of that, and then half of that outside hedge. So as long as the price moves between this range, you will make money, but not big money. But if there is a spike that's happening by the end of the week or mid of the week or somewhere, then that may give you opportunity to have little more gains when the spike happens. But yeah, it's completely risk defined and very low risk, low profit kind of strategy. It's best to do when you have troubles, uncertainties ahead. That's a payoff graph of Nifty option strategy that we have just seen. Now we are trying to wrap up things. No, yes, markets did make new all-time high last week once again, and then it met with resistance and reversed and gave up most of the price gains in the moment. But it still managed to close above the 20 exponential moving average, maintaining the higher high, higher low pattern. Right, and it's a total correction of 5 to 8.5%. During a 29 to 35% of rally that has been happening outside of the cup and handle and multiple flat breakouts. So if you bucket the factors that's where were the bulls and the bears, for the bulls, the fact that the medium term momentum and the trend is bullish on both indices, where the short term has got hit it on. And it still maintains weekly exponential moving average greater than 20 weekly exponential moving average. But the banks are not expanding on the downside. It's Nifty is beginning of a contraction and Banknifty is still expanding, so that way it goes in favor of the bulls. Higher low pattern price action is maintained. It can show small cap or completely recovered at the very top all-time high, very close by. Sector indices are all either sideways or bullish except for the IT. Heavyweight stocks are all bullish or sideways except for two stocks, the IT and the Kodak Bank. Crude oil is cooling off, dollar is cooling off, US markets are green. So good double Qs, so all factors in favor of the bulls. So what goes in favor of the bears is the bearish engulfing that formed in Friday. That could extend itself with a combination of the shooting stars, double top and breakdown, could come in, especially the fact that the Nifty has a gravestone doji, which is highly indecisive. India VIX is very weird, the way that we have a 20% fall and then a 40% spike. So we have to be cautious since they're heading towards the 15 again, you know. So there's high uncertainty ahead of the election outcome. So we have to be cautious of that fact. Bearish put call ratio is what the open interest is from Friday's futures high is long on binding, so it's not trouble. Fyers have been net sellers around, even if they bought something today, this week it was very less. It's there still in the selling mode. The short-term momentum is sideways and the trend is also the bearish once the case of Nifty. And global is still very close to the all-time high, not cooled off that much. So all factors in favor of the bears. So once again, it's a new all-time high hit faced with stiff resistance by sellers out there, and the double top band pattern, shooting star doji, and all these, and along with the bearish engulfing patterns, you know, they've taken down. They're all shadows of danger out there. You know, a good amount of the price gains and the momentum and the trend is all taken away in the short term. So that Friday's big resistance, big sell-offs. So the now question is, would it fizzle out? Would it consolidate, or would it continue to fall in that intensity or lesser intensity, or would it stop here, you know, and then try to make another attempt towards all-time high? That's a question that we'll have to figure out from this study. It's my view, based on the technical studies, that we are seeing market is sideways. Well, the neutral view is what I have, but I have a mild bearish bias because of Friday's move. Mild bearish, no, we will be consolidating basically. Black swan events, always be wary of that and be cautious about that. And then, you know, Fed event is over. I have still put that because it was last week. Fed event is no longer there. The outcome is clear. There is no change, and market has reacted and responded to that. It's done. Now, other outcomes that is to come in from the elections and inflation, war, and all these fears can cause black swan. We can screw up all your technical analysis all of a sudden. So that time, all that comes in handy is we have a portfolio level stop loss. We have a hedge on every positions that you have taken. Have you taken counter positions to manage? Do you have diversified investments made and that hedges for the losses that you may make? If you're not done, then we may have. So that's what you have to plan instead of worry. So levels to look out for is 22,000 and 48,000. And if that is breached, then we have a problem. But if that is maintained, we are still consolidating. So the next week is at 22,000, 23,000 on the Nifty and 47,000 and 50,000. Very wide range for the Banknifty. It could be anticipated. So manage your risk and have stop losses and hedge always. And that's all you have to worry about. Play it safe. There's big volatility near to the elections. So if you're not a professional trader, stay out of the options for just another 1 month, and then you can get back in after the outcome has come. And there will dip maybe opportunities for buying in long-term quality, because India's story is always so long. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.